as soon as they understand that Bitcoin is a very, very long duration asset, it perfectly suits protecting the wealth of nations. That's all the sovereign wealth funds are, right? Usually it's an oil or commodity producing country that gets windfalls in boom times and has hard times, and they offset it by drawing down on this pool, right? It's a savings pool. Now, that savings pool needs to grow over time. A lot of it's denominated in US dollars because everything's in dollars. So they try and diversify, but to have assets that offset global inflation or global debasement of currency, etc., it's a perfect asset, particularly because it's so skewed to the upside that they can have a 3% allocation. They can lose half of it and it makes no difference. If you get it right, it really does make a difference to the portfolio. So I think it's very well suited. The problem is, as I've argued all along, is they can't really come in until it goes up more in market cap.
Right, it's just not big enough.
Just not big enough yet. Because these guys are, Norway, I don't know, it's $1 trillion, I mean, these guys are huge. And they're not like BlackRock, which is, a few $1 trillion, but they've got millions of different funds. These guys are basically one gigantic asset allocation. It's, a ticket for them, they even allocate hedge fund ticket sizes of like $1 billion or, $500 million. So let alone doing something like this. So they need to put 10, 20, 30 billion dollars at work just to have a minor allocation. It's huge. I think 10 trillion, I think something like that makes sense.
Gold or bigger.
I think also it is interesting. I think Michael Saylor's been talking about this, but I don't think he's explained it super well. He's talked about the cost of capital being 15%, and therefore all of these corporate treasuries invest in bonds. What he's actually talking about is if you take the printing of the balance sheets by the G4 central banks and you annualize it, it's growing at about 15% a year, which is that denominator falling by 15% a year. So you do buy bonds. So now let's say you are Microsoft. Okay, you've got this gigantic corporate treasury, several $100 billion in it, and you've got a bunch of credit and a bunch of normal stuff. Now, all of that is underperforming the Fed balance sheet. Now, does it really matter because wages are also underperforming everything else? It underperforms because people like Microsoft do two things also: buy companies and buy real estate. Both of those are priced in Fed balance sheet terms. They keep going up because they're fixed assets. So they haven't got their heads around this yet. I think people haven't really explained it to them that sure, your cash flow and the corporate credit that you own will carry on for your needs for salaries or whatever else it is, general organic growth. But if you want to buy things, they're more expensive. I think it's, I've talked a lot about the pension crisis, they're underfunded. And they took a lot of risk with people's money and put it all into equities. Now, it's still not enough for people to retire. So we've got a huge problem. Can Bitcoin help plug that gap? Yes. But they've structurally got a real issue because you've got this millennial cohort that needs to buy a lot of stuff, and that's fine. And that's piling through in the passive investment vehicles and stuff like that. And then you've got this 76 million Americans who are trying to retire and can't. It's a bit of a messy situation. I do expect pension funds to come into the space because they need to. The long duration asset works well for the millennial. It could save the boomers, but there's a lot of risk to do it. So I don't know.
10 trillion market cap. I mean,
they can't not, right? But there again, right. Don't forget everyone, again, the space makes me laugh because everyone's like, oh my God, but gold's a 10 trillion market cap. Yeah, find me a pension fund that invests in gold. It's like about 3% of them. Nobody cares. So it's not really an asset people think about. So it's really funny, this gold versus Bitcoin thing, because actually, and Dan Tapiero talks about this a lot, nobody's in gold anyway. It's basically family offices and retail and central banks that own gold, but not pension funds. Some endowments do, but not really.
So when do central banks own Bitcoin?
I think it's going to come from a small nation, somebody like Costa Rica or somebody like that. Somebody who's had currency problems in the past, and they've got a progressive young leader who says, let's just own some of this. So it's coming. Does it come on this cycle or the next cycle? My guess is actually this cycle. There'll be somebody small and everyone will laugh at them and say it's ridiculous, as is the way, right? That's hard for all of us to get our heads around because we think it's wrong. I never forget when I first went to my oldest friend, I've known him since I was 6. I went round to his house and his son was like 14 and it was a Saturday and he was in a gaming chair, gaming. I'm like, what the fuck's going on here? He's like, well, he's been out playing football with his mates and stuff, but he's now socializing. I'm like, what are you talking about? Because we used to go to the shopping mall and meet our friends and figure out what's going on that evening, who's having a party. They do it all online. He's got his friend in the US, he was based in the UK, he's got his friend in the US, a friend in Spain, a bunch of his neighbors, all hanging out in Minecraft, whichever game he was playing, Fortnite, chatting. And I'm like, okay, the world has so much changed that I and that's okay. I don't have to say that's wrong, it's terrible, it's how it changes. Again, we don't know. What we do know is they're going to get something out. I think the argument that I've been hearing that I think is pretty reasonable is that they should not be doing it themselves. They should let the private sector, they might want to own the wallet or the on-ramp or off-ramp so you can have a government wallet or whatever it is that they need to get their taxes and get their KYC and AML, right? We're not going to get round that. Should the private sector do it because it innovates faster? Most likely. I don't know if that's the way it goes, but that would make sense to me. I think the innovation is going to come in behavioral economics that I've mentioned many times to people. I think having digital money allows behavioral incentive systems. We're used to them on the internet. You do certain actions, you get a like button, you get, all this behavioral stuff that's built in, we can do with money. So when you asked me the question before, what do we do about all of these people in retail that couldn't get a job? Well, you can give them a different set of outcomes to others. So, let's say you do quantitative easing, you can actually give them direct capital from that. You can lower their tax brackets. You can do different things that's easier to do than it is. You saw trying to get stimulus to certain people was a nightmare in the US, but you should be able to go to granular level. Those people in that town, because they've had a hurricane, and we can then stimulate them without having to do a postal kind of sending out of check, the madness of all of this. We can stimulate different things, create different incentive systems. So I think the world is going to change. I think, one of the things of my exponential era basket of things that we talked about, I think behavioral economics is one of them. People won't like it either, because what it is controlling humans by incentive systems. But it's actually a better way of organizing government in some respects as well. So it comes with, as always, unintended consequences on the negative side and the positive side.